I want to show you where we're trading here pre news event. We have the S&P 500 up, which is, no surprise there. It's up every day. The Dow, and then you have the NASDAQ kind of holding in there. In fact, the Dow, tech got hit the hardest here recently, which I thought was interesting, but we'll see where that one goes. The dollar index is off of its lows, which is also kind of a concerning thing. If you're watching the indices, if you also see a rising dollar, we'll have to keep an eye on that. That not always is the case that they have to move inversely to one another, but oftentimes it is. Euro dollar is trending lower here this morning. Pound dollar popped and is now giving back some of those gains ahead of the news. Again, looking to these numbers that are coming in a moment to give us some clarity on which direction these markets are going to want to move. Oil is trending higher here this morning. In fact, where are we trading on oil? I can't even see it. It got taken off the screen. Yeah, oil is making a move here above 80, which is an impressive push on the US oil market. And gold is pulling back. We're trading at 21.67 at the time. We'll continue to watch all of these markets, and I'll have updates for you with the numbers in front of us when they do show up. I also wanted to just make a quick shout out to the A1 team. We've worked really hard in the last 24 hours here to update and improve our retail sentiment. Not only that, guys, we've got new assets, and this is kind of a secret, but kind of not. Check this out. We've got some new assets coming to the Edge Finder. Platinum, silver, copper, right? Some more commodities, some things like that are making their way into the Edge Finder. I'm really excited about that. Iron ore, right? So you've got some new components, some new additions to the Edge Finder's retail positioning. Of course, this is showing us where retail traders are positioned, generally speaking, on your favorite currency pairs, commodities, indices, etc. Where we see right now a lot of traders on the indices is they're very short biased, right? So that's a little bit concerning. I've been kind of staying on the sidelines for that reason. We'll see how that plays out. But indices, retail traders are typically very short. If you take a look at some of the metals here this morning, gold, by the way, is closer to this extreme. So we see gold almost getting a contrarian reading. By the way, contrarian on the Edge Finder is anything over or under 60. So for example, NASDAQ is getting a bullish reading overall because retail traders are 61% short. On the other side, you've got a bearish read for copper as an example, because there's an 80% of positionings are on the long side, right? So something to think about is that when contrarian kind of signals are the idea that when everybody gets parked on one side of the ship, we want to make sure we're not there if it's to flip over, right? Anyways, updates on the retail positioning are really exciting because we've got a lot of things added here. We've even added, and I think we've got Ethereum now coming into the Edge Finder, which is really exciting for my crypto friends. We are bringing some more cryptos into the Edge Finder's stuff.
Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Commodities, of course, we've got oil as always, indices, right? You can select by what you like to trade. So if you're somebody who's just an index trader, you can select indices for yourself. If you trade metals, here's all your metals, right? Everything from gold, iron, silver, copper, platinum, etc. Kind of cool. But anyways, there's the full list. The updated list is ginormous. So we have got some cool new updates coming to the Edge Finder. To those of you guys who already have it, that will come to you totally free of charge. All updates, all improvements to the Edge Finder are yours for free if you already have it. So enjoy the new stuff and get ready for a lot more of it because we got some good stuff coming. Anyways, yeah, oil is making a move higher. The dollar index trying to stab higher here this morning. And again, we are just about 3 minutes out, guys, from the numbers. I am excited about it. A lot of traders, they don't trade news. And let me reiterate something. I absolutely am not an advocate for trading the spike of the news. So what I mean by that is I'm not dropping down to the 5-minute chart and putting buy stops and sell stops. Because if you think the market is that easy, welcome to the most difficult thing ever. Trading is way harder than just putting a buy stop here and a sell stop here and you think you're going to make money. The reason you're not going to make money doing that long term is because brokers, if you put a buy stop here and you say, okay, yeah, if this thing goes up, it's going to go straight up and I'm going to make a ton of money. Well, what happens is that you put your order here. Remember, your order, your buy stop, that is a market order. So when it fills you at the best possible price. But if the gap is huge, you actually get filled here, right? So if there's a huge gap in price and you put a buy stop here, right? Buy stop order says when it crosses above this level, fill me at the next best possible price. But if the next possible price is here, and then the market initially, like it jumps here and then jumps down, you can get crushed, right? So a lot of traders learn that the hard way. Do not do that. I'm telling you, it is a very, very dumb decision. It seems intelligent in the moment, and then you do it for long enough and you realize the brokers are not going to let you print free money like that. It's not how the world works, unfortunately. Money is precious to the broker just like it is to the rest of us. So again, just a quick recap. We've got your indices in the left, right? You got euro and pound, dollar here, gold top right, oil bottom right, okay? And we are coming in very close. We're going to go through all of the news numbers. There's 800 people in here. Make sure to hit that thumbs up button if you haven't already. Very much appreciate it. And now we're going to go ahead and do our breaking news. All right, coming in here, let's see what we get. Retail sales and the producer price index coming out right now. All right, we're seeing an initial blip lower here. Dollar index is up initially. Let's see if we can get the numbers. So remember that both PPI, I mean, all of these matter here to the market. Let's see how we're getting reaction. US 30 is down slightly. S&P down slightly. NASDAQ down slightly. Dollar up. Pound up. Euro down. I'm sorry, pound down. Euro down. Gold down. Oil up. So let's see what we've got in terms of the numbers. Somebody had a question. Emily dropped this. If you guys ever have questions, please feel free. If you have any questions you need any help with, whether it's a software related question or any of our services, etc., we'll drop the link here again. Chandler will do that for us. You can send a direct message to our team using this link. All right, so we got the numbers here, guys. Let's take a look. Retail sales. Let's do that one first. Retail sales came in core a little weak, retail sales weak. So some softness in the retail sales number. That's big, right? At the same time, you got hot inflation. Okay, I'm going to say that overall, this is generally painting a more bullish gold situation. Maybe not initially in the price reaction, but let's look at this. So softness in the economic reads, right? Retail sales numbers came in soft. Okay. Softness there. Inflation stubbornness. Again, we've gone over this many times on the channel recently. Inflation stubbornness plus economic confusion or slowdown means very bullish for gold. That combination is the sweet spot for gold. So unemployment claims also came in. They revised, improved the last number. So jobs data, a little bit of bounce back in the jobs data. Let's go take a look now at where gold is at, because I'm curious about this. Now, I am already long gold. I have 2 positions on gold. So let me pull that up really quick. Gold is down 0.5%. I have two positions on gold. One initially back here at 2030 an ounce, which obviously looks very good right now. But I added a second trade here recently on this pullback. Let's drop down to the 4-hour chart. So this is where I entered. I added a secondary trade to my gold long situation. My stop loss is very tight here. So if price does break through this, I'll totally get out of my trade, of course, sticking to my risk management strategy here. But let me just kind of reiterate that these numbers here today, in my personal view, don't threaten too much the bull case for gold. Let's break this down for a second. We got PPI. Okay, let me do this. PPI. And we had retail sales. Okay, so these numbers are important, guys, because here's what happened. PPI showed still stubbornness and stickiness in inflation. This is going to not necessarily be great for gold initially, right? So the case here for this is like, oh, well, yeah, Nick, that's going to be strong for the dollar and they're not going to cut rates as soon. So you might say, well, sell gold. But the other side is we're seeing more evidence here that the economy is slowing. Maybe not recessionary, but retail sales here this morning were again more evidence that the economy shows some slowdown in it. And if that slowdown is happening at the same time as sticky inflation, that trend, if that continues and becomes a bigger trend and a bigger divergence continues to happen in these two sorts of numbers, right? The inflation here, the economy here. If we continue to see divergence in that, in the way that we're seeing it, it's a very bullish catalyst for gold longer term. Because what happens is that this number keeps going down and the Fed says, okay, we don't want unemployment to slide. We don't want the economy to slide too much. So we're probably still going to cut rates. But they still have an inflationary problem too. That combination causes a lot of concern, and concern is the middle name of gold, right? I don't even know what the last name. XAU, concern, USD. That's gold's full name, okay? Or you could swap out concern for fear. But the idea is basically, if you get that combination, I actually don't think that this is super bearish for gold at all. So fundamentally, I stay bullish on gold. Technical analysis really quick. If we scoop through the lows and we break through that, yeah, I will totally close out all of my trades for a profit. Now this secondary trade won't be doing so good, but this is where I added to the trade. My initial trade was back at 2031 an ounce. So if we get stopped out here today, I'll take profits on the whole position, but I don't hate this number here for the overall story. This past week, we saw a lot of accumulation of gold and silver, but it's not the first time. I've pointed out this chart many times because I find it to be fascinating. Let's switch over to gold here. This one might take a second to load. The edge finder is always a little slower if your computer is working hard, and mine is working hard when we stream. Okay, so this is smart money versus retail money when looking at gold's price. And this is really key. So big money, and I've made this point many times, but I like to use this as an example for how COT data and retail positioning and all that stuff, why it's so impactful. Okay, look at this. The net COT positioning started to get really heavily long late December, early January. There was an accumulation phase, it seemed like. But then you can see the white represents the price of gold. The price of gold was just kind of trending down and sideways and not really going anywhere, trading around that 2000 mark for some time. But the bigger story here is that big money was staying positioned bullish on gold, and then it exploded. And look what happened. Retail traders started to really hold the bag. So the red line, guys, represents retail positioning, and retail positioning has started to get very bearish in recent times. It's come off a little bit of its bearishness. We'll get the latest print. I think it'll probably look like that. because the gold market has pulled back a little bit and retail traders typically are just counter trend. So what I find very interesting about this move is that when this thing started to explode in price, you had institutional money long, retail traders getting short. Fascinating. And again, it's like I've been doing this for a long time, and on these markets, gold, currency crosses, indices, this is a recurring pattern. As markets trend one way, retail traders are fading it and getting, usually destroyed, right? They're usually selling a rally and buying a sell-off. And when that happens over and over and over, it's a pattern that is recognizable and tradable. So that's how we trade that within the Edge Finder. Miko, what's on the watch list today? And, lots of movement in the market recently. Are you in any trades, or are you watching any particular setups?
Yes, so I'm currently long on Aussie dollar on the 4H time frame. I'm looking to see if we can take advantage of some dollar weakness, because last week I was speaking a lot about taking advantage of some dollar weakness. We broke through a really strong level of support in the DXY, which I'll touch on in a second. But yeah, on the 4H time frame, I have spotted this bullish structure here: high, high, low, high, high, and I'm looking to see if I can take advantage of the next high low. And there's a lot of room to the upside for this Aussie dollar move. I'm looking to see if we can potentially come up to the highs there. I will be trading a stop loss in this position, so it just depends how far price takes me. But I do think we can go pretty far. I'm also keeping an eye on dollar CHF. I'm liking this one to the downside. We do have a pretty established bearish trend on the higher time frames here, and I'm looking to see if we can form another swing high and possibly another move back down. So this is a bearish swing opportunity I'm really interested in. However, I do need to wait for price to actually start breaking through some support first. That'll be very much appreciated, and then I'll be looking for my opportunities. We already failed at the highs here, so that's like the first sign that maybe this bullish move is starting to come to an end, and maybe we could be looking to push back down. So I will be looking for breaking retest on this area there as well. And touching the DXY briefly, really had a really strong move to the downside, and I do think there is a lot more room. Personally, I think we can make our way back down to this support level. A lot of key tests of this area. We came back into another area of resistance, failed to break through. Really strong reaction. I do think there is room to the downside. So with that kind of bearish outlook on the DXY, pairs like dollar CHF, I'm looking to short. Aussie dollar, I'm currently long. I do like Euro USD, but until I get my Aussie dollar position to break even, I'm not going to jump into that pair. But I have been looking at for a breaking retest of this area, which we're not really close to. But if we get there, I will see. But of course, I do need to get that Aussie dollar to break even. So I'm kind of dollar orientated about now. I do like some counter trend opportunities on some Swiss pairs, some yen pairs, sorry. CHF JPY being one of them. I'm keeping an eye on a retest of this level here for some downside, but I'm mainly focused on dollar pairs for the time being.
Very cool. Yeah, I think it's interesting the way you laid out the Australian dollar and just generally the dollar crosses seem to have rolled over. We talked about the dollar index last time, and despite some of the hotter inflation reads, still looks like the dollar could be coming down lower. We're seeing a lot of slowdown in the economy, and the dollar index, at least from the technicals, has really broken that upward steam that we had. And I think that if you do start to see the probabilities of interest rate cuts come sooner or more aggressively, it's not out of the question that the dollar could make a move back down to this previous low that we formed right around the turn of the year. So very interesting just to see that dollar index move higher, start to fizzle out, start to fade, and start to move lower. We'll see if that does continue. Of course, one benefactor or sort of a market that benefits from a weaker dollar is not just the other currencies, but also gold. Gold has been flying high recently. It's broken out. I think since the last time we've spoken, Miko, we talked about how gold was just in this very frustrating range. It seems like we've broken that theme, and I'll come back to Marco on this too. But I just want to, while you're still on the topic of dollar, what do you think about gold here? I mean, is there a, if you're not in this move, what are you thinking in terms of like pullback opportunities, or do you even touch the thing when it's such a big move? What do you think?
So yeah, I'm still pretty bullish on gold. I do think gold has, I mean, a lot of room to the upside despite it being at all-time highs. However, in terms of actually trading it, I do have a level down here, which I'm looking at 2089 roughly, which is this high here. So this was the level I was looking at originally when we had the breakout last week, and then it just kept going. So it's kind of left me behind a little bit. But this for me is the only valid area which I would buy gold from. There's no other area that makes sense to the way I trade. So I'm kind of looking to see if gold, it's a bit of a move, yes, but I'm kind of looking to see if it will pull back to this level. If it doesn't, and it just kind of continues, then it continues without me.
Slow down this flat range right here. So yeah, it's looking to be exhausting the upwards trend, but before that, definitely some very clean price action. I can see like a flag formation. I would be very interested to take here as well. Oh, this is looking really clean. I should take a look at gold, because this is showing some really nice price action. Like these candles, these nice blue candles is what I love. And they're not that, like they don't happen that often. They happen very rarely, I would say, consecutively like this. But yeah, clear slowdown on the top. So I would wait for the momentum to kick back in. If I was looking for buys, I would wait for something like this to happen again, because this is absolutely perfect. Two of these are flags, which I would be 100% taking if it was on like the euro and US dollar, let's say. So I would wait for this sort of momentum to kick back in from this range.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.